Good evening, everyone, and welcome. Thanks for joining us. Citigroup has struggled more than most banks since it was bailed out by Uncle Sam during the depths of the 2008 financial crisis. Since then, it's undergone a handful of management shakeups, battled questions about dubious foreclosure practices, fended off allegations of lax money laundering protections, and faced a number of probes into its banking practices. And just last week, the Federal Reserve rejected Citi's plan to raise its shareholder dividend and jack up its stock buyback plan on concerns about how much capital the bank has on hand. Now, the bank's troubles just got worse. The FBI has reportedly launched a criminal investigation into the bank's role in a $400 million fraud involving its Mexican banking unit. Investors have taken notice, sending shares down another 1% today. Michelle Caruso-Cabrera has more now on the latest news about Citigroup and how much more the banking behemoth can take.
The FBI is investigating Citigroup's bank in Mexico, Banamex. Once considered Citi's crown jewel, Banamex is now a big problem for Citi. The company revealed in late February a $400 million fraud involving an oil services company in Mexico. Even before today's news of a criminal investigation, analysts questioned whether Mexico was one of the reasons Citi failed to pass the Federal Reserve's most recent stress test.
We have a sell on Citigroup because we do think that the company is facing a pretty tough time with all of this international upset, and particularly as a result of what went on in Mexico, where they let $400 million out the door without basically, stopping it. So I think that it made a heck of a lot of sense for the Fed to come down on Citigroup because clearly their controls are not in place.
The lack of control from the top has some analysts calling for a broader shakeup at Citi.
John Gersbach, the CFO, was the chief accounting officer going into the financial crisis when Citigroup had accounting mishaps. 2 years ago, Citi was turned down for its capital plan by the Fed. That's strike two. And then yesterday, being turned down again is strike three. 3 strikes you're out. I think Citi needs to replace the CFO.
Also at the center of the controversy, Citi's co-president of global consumer banking, Manuel Medina Mora. Medina Mora has been in charge of Banamex since 1996, and Citi already docked his most recent bonus by more than $1 million for lack of sufficient management controls at Banamex. Some say the issues the company faces in Mexico are a sign that the company is just too big. John Reed, former Citi chairman, said at a conference earlier this week that the company was so immense and complex, it's nearly impossible to manage. Still, Citi has its defenders on Wall Street.
I would be buying Citigroup at these levels. Extremely attractive. A lot of concern in the marketplace already baked in. We have a couple catalysts coming up in terms of earnings that I think will be mixed, but I think there's still a catalyst that they can resubmit, get on track.
The question for Citi, how much more bad news investors are willing to take. For Nightly Business Report, Michelle Caruso-Cabrera.
Let's turn now to Todd Hagerman for more analysis on Citi. He's managing director at Stern AG. So, Todd, I understand that until today you had a buy recommendation on Citi. You've downgraded it to neutral. Tell us why. And neutral still sounds like you have some hope there.
Well, I don't know if I'd say there's hope there, but basically, as was reported in the story, the regulatory risk, the legal risk, I think people are really underestimating those factors going into the story into 2014, quite frankly. As you mentioned, we now have criminal investigations, certainly surrounding the money laundering. I would expect that regulatory action is going to soon follow surrounding the Banamex situation. But more importantly, you've got a company where their expenses remain very elevated, notably tied to legal. And, I should point out that they're a little bit behind the curve relative to their peers in terms of settling some of these big lawsuits, which leaves some investors questioning whether, book value might be subject to impairment in the near future. So I think at the end of the day, you're going to have a protracted legal and regulatory scenario, which is going to keep people on the sidelines and keep pressure on the stock.
I don't mean to be impolite, Todd, but with all you just said to me, I am absolutely dumbfounded why you wouldn't put a sell on that stock and get the heck away from it. Why not? I don't get it.
But look, yeah, well, I mean, you have to take a step back and look at the situation. The earnings have come down on this stock the last 3 to 4 consecutive quarters. There's a lot that's already heavily discounted in the shares right now. Certainly, there was a lot of optimism going into the Fed's capital review program last week. Obviously, a big blow to both shareholders and management. But if you look at the valuation today, there's a lot discounted. I don't think there's a lot of downside here in the stock. But by the same token, I think there, I really can't see much upside from here. I just think it's status quo for a period of time.
Citi has been under the gun for so long now. In the story that we were just reporting, there was the point that it's just not enough control at Citibank. Is Citi just too big, too complex, too hard to manage?
That's an argument that goes back to John Reed, as you reference in your story. This is a very large, complex organization, and I would have to agree, no single individual is capable of managing this company. And it's been proven time and time again. We're starting to see a revolving door within the CEO office over the last few years. And, it's a very challenging operation when you have a global network that stretches, from, Asia to here in North America to Latin America. Very difficult, and in particular, the Fed is going to have a hard time understanding your control mechanism within an organization like that.
All right, lots to talk about here. Thank you so much, Todd. Todd Hagerman, financial services analyst at Stern AG.